When we're trying to grow wealth, when should a client actually loop an accountant in? What's the ideal time?
At the beginning, and start with the end in mind, not just taking that next step, because again, where we see clients get hamstrung is not thinking about steps 2, 3, and 4.
So what are your philosophies around property buying and how do you use this with your client?
I've seen a lot of strategies online when it comes to property. Look, all strategies can work, but my personal philosophy is that I prefer to let the market do the hard work and not me. So I personally prefer to buy existing properties and just hold it for a long period of time. And I just know it works.
Talking about creating wealth, generational wealth, what should parents actually be thinking of?
One, when do we want to give money to the kids? The other component is, back to estate planning. And then also things like insurance, that there's a need for it, particularly when you're building wealth. And then as we have wealth, we can then scale it back down.
Go slow to go fast, and we'll get there. Doesn't matter how long it takes, but we'll get there safely, and it won't stunt your growth. It will keep you moving forward. Hey buddy, welcome to this episode of Finance This, Property That. He's back. Master Buyer's Agent, Chris McNulty. Today, Chris McNulty from Lucid Property Investments. Today, what I'd really like to discuss is collaboration. How does the right property and the right finance strategy help you build a portfolio that will grow over time and help you retire, I guess, or help you achieve your goals? Mate, thanks for coming on.
Thanks.
I know you're waiting on a really important phone call from your surgeon to see whether you're going to get surgery or not on that poor arm.
Yep, it's true.
But hopefully he doesn't ring in the middle of this conversation.
No.
Mate, let's get cracking. Let's get into it.
Yeah, I'm excited for this. I think this is a really, really interesting topic.
It's important, right?
Yeah.
So, mate, Chris, you're seeing investors and people coming to you all the time, right? They speak to a buyer's agent and they don't speak to a finance strategist or someone that's got their finances versus someone that does speak to a finance strategist first, then comes to you. How does that, I guess for you, how does that change the way you look at a client?
It makes me, it's clear to me what level they're at and how far they're going to go in some ways. Like some people just come along, think they know everything. I spoke to Westpac, they said this, so let's do it. And look, I'll buy them a property, of course. But then there's people that come along and they're organised and they go, oh, well, Dion told me, we can do this based on this, and then we're going to roll this over into that, and then we'll refinance here, and then once we've got this to this point, then we're going to do another one. I'm like, yep, you are the people that are in 2 years' time are going to have another $1 million of net worth to your name because you got to plan how you're doing it, and that they're hitting it in two ways. One is they're getting a tailored finance solution for it, and then getting a tailored property strategy that works together with that finance solution to get the outcome. Can't lose.
Well, you can't because it's organisation.
Yeah.
Like in this particular
Somebody
market.
has thought about it.
Yeah. Well,
imagine that.
That's one of the biggest. I mean, I guess what are some of these factors in relation to why that's so important? That synergy between buyer's agent and property strategy and
finance strategy.
Yeah, sorry, finance strategy. So property strategy, finance strategy. In this current environment, why is it so important?
I think it's important because there's so much noise out there, and it's very easy to get sucked into, oh, I heard, a clip of somebody saying this. Oh, I should use a trust because apparently that gets me unlimited borrowing. It's like, sure, that may be the right strategy for you, but it also might not be. And using that strategy might significantly limit you. Like if you need to use the negative gearing immediately and you don't have a very complicated finance structure and stuff like that, then the trust is probably not what they need.
Or they may not need it yet.
Yeah, or need it yet, exactly.
Why do you need one? I
just think there's so much noise out there and someone, comes down to the don't know what you don't know.
Yeah, and it's the bane of my existence at the moment. I just stop. I don't, in the first phone call where I speak to someone, I don't talk about rates. I don't talk about structure. I don't talk about the bank. I don't do borrowing capacities. I'm actually finding out about you. Why are we here? Why did you make this phone call? What do you want to achieve? Who's on your team? What do you know?
Yeah.
because that helps me understand their level too.
Well, then gives them the opportunity to get the outcome, because if they tell you that, then you can tailor a strategy rather than coming to you and treating you like a finance ATM of, oh, Dion, we want to do a trust lend. Here's our financials. Can you get us lending in a trust? The answer is, yeah, sure, you can do that, but is that the right thing for them?
And where did you get the advice?
Yes.
That's the most important piece. Mate, also, I think, from my point of view, being organised helps you get better deals.
Oh, yeah, absolutely. Because someone knows what their capacity is, whether they can pull the trigger, ready to go. They've got that confidence. And so we can go in without a finance clause or go in with a very short finance clause. Makes a huge difference. Like, I haven't gone to the point of saying that clients need a finance approval. I'm close. I much appreciate when they come in with a pre-approval.
And pre-approvals, I'm one of those people that don't do pre-approval.
Really?
And the reason why
Just ruin the podcast.
No, it's all good. No, people do, people don't. I feel if there's not a reason to do it, we don't need to do it, because usually the second property, that property may not be going with the same bank we restructured to.
Yeah, and I guess what I will say, one caveat to what I'm said there about the pre-approval is pre-approval, or have a very clear idea of what their finances are, their abilities around it, and the likelihood of them getting the approval and being able to purchase the property.
Yeah,
so which is effectively, in a way, it acts like a finance approval in some ways.
Because at the end of the day, the way we do our strategies is we scenario test it, then we build it out. We know exactly where we're going. We tell that to the client. We know what policies we're using. We know the timeframes. There'll be certain lenders that you'll stick a pre-approval for, but no one's going to assess it.
Yeah.
I could stick anything in there, and then we wait 90 days and they still haven't found anything. Wow. So I've just wasted an application and wasted a credit check.
Yes.
That's the most important thing, because you need three things when you're financing or when you're trying to build a portfolio. You need income that's growing, equity that's growing or cash, and you need good credit history.
Yeah, I think the credit history one is the one, for me, who is not a finance person, is the one that is forgotten most. Sure, I think there's a good understanding around, the requirement of equity and borrowing capacity, not necessarily the correct, but at least there's awareness of it. Credit ratings and credit history, very few people talk about that, but it actually, tell me, how important is that?
It's irrelevant how much you earn or how much equity you have, because as soon as you submit the application into the bank, the first thing it checks is your credit file. So a red flag, or major, if you're trying to build a property portfolio and you're going to a lender that says they do, or a broker that's saying, oh, we're going to do a strategy for you, and they don't tell you they're checking your credit file, and they don't show you what they don't discuss it with you or don't make a mention of it, that's a massive red flag, because they haven't checked it. It's the first piece. That's why we check it first. I don't care how much income you earn. Sign the credit guide and privacy form. We get a copy of your credit file and we look at it.
So tell me, how I'm turned into podcast host here, but tell me how much an impact does that have? What's a average to bad credit score?
So a really good credit score is anything above 750. 750, 800 is really good. And the things that reduce your credit score is the amount of applications you've done in a certain amount of time, whether that be home loans, credit cards. God, please don't do credit card applications if you don't need to. Sometimes even phones. So the phone, they check your credit file.
Of course.
The utilities check your credit file. Asset finance, all that sort of stuff. And if you're a director of a company, every time you apply for company debt, like a
goes into your personal,
goes onto your credit file, because you are the guarantor.
Okay, so then what's a credit score of 500? If someone comes to you at 500, is that pretty average?
Hard.
All right,
that's 500. We're actually really narrowed down to the lenders that we're using, right? Then it comes down to which lenders will you go 500 for. So we can't get the premium lenders. It's harder, especially when we're trying to build out strategy over time. So classic example is one client had a score of about 373 when I saw them, but I already knew why it was 373. So in January last year, and I talk about, I can't tell you who they are because it's
Course not.
sensitive. But there was extenuating circumstances that we couldn't do it. So we strategized. I'm like, mate, this is going to come back good in June. I already know that thing is not going to be there in June. We already know. I already can see your last 6 months. Great conduct. Everything's great. I just don't want to pull the trigger on this. They listened. They've gone from one property to first property being purchased, made 300-400K after renovations on it, revalued
Nice.
it, went again, and we just finished their second purchase together.
Oh, nice.
And that's they're up to like what 4-5 mil in property.
Yeah, because they waited.
Listened.
Listened.
Right.
Yeah, listened. That's
Listened.
far more important.
And it wasn't great because they didn't. That's not what they wanted to hear.
No.
But back to your point with credit checks, mate. That's the. I didn't talk. I go. I know you guys can afford it. I know you guys got the equity.
Yeah, it's not about that. It's the
really
fact that
not
no
about
one would have
that.
lent them the money.
Well,
Or
one of them
few.
had great credit.
Wow.
The other one didn't
Wow.
because of an extenuating circumstances.
That's,
But
that's
patience. Oh,
that's really
complete the reno.
interesting.
Yeah.
I didn't know that.
So that's really important, and that's why that's the make or break of a finance strategy, mate. And there's no point in coming to you if they haven't had that. I just don't think there's.
No
I
point
just don't
coming
think
if they
there's a
can't
point.
borrow the money. Yeah.
You can't borrow the money. You don't know unless you flush with cash.
Well, that's very different.
That's a different. They don't need me if you flush with cash.
No.
But how do we collaborate? Like when we're talking, like how do you? I know how we do it. I think we do it very informally, but
I think that one of the things that struck me is that I think that we have mutual educating each other. I think that's one thing that we do. It reminds me of about 2-3 weeks ago. You came into our office, got a highlighter, got a whiteboard pen, got onto our whiteboard and explained the lending process on a value add
that's
project.
basically what I did.
Yes, what you
My
did.
like Horror Street,
That's what I'm saying. You did it for us, and so all four of us in my team watched you doing that, and we learnt a lot around that. Of like, okay, that's why that's important here. That's why we need to explain this thing here. It's why this bit here, and it was really important. And I think that that was a bit more formal of like you were on the whiteboard, but I think that by having these conversations every week about stuff, we're both learning more and more in a really subtle way because it's not a formal learning.
No.
And so then through that, able to inform what we're doing individually in our professional outcome and goal for the client because there's an awareness of the other piece and being able to create a more holistic approach, a more like combined, all heading in one way, like maybe aligned is the right word.
Yeah.
And I think it's a very subtle thing.
Yeah.
Yeah.
I think that's really important too. Like, I don't mean to do, I just go, I love sharing knowledge.
Yeah.
That's why I do the podcast.
Yes.
But I love helping people at the same time. But then I also know that I'm getting a lot of help inadvertently back. But not that I talk a lot about the property market in the sense as the same level as you guys do. But I understand it a hell of a lot better because when someone's telling me, it's this, and this, I'm like, no, it's not. Like, I can tell you it's not.
Yeah.
Like, in my head, I'm going,
Like, I know a lot of
can
brokers,
challenge.
a lot of excellent brokers. I would, and I genuinely mean this, I've learnt more about finance from you than any of them. And I really genuinely mean that, like, because you've got a way of explaining it. You understand it at such depth that, and you know how important it is. And so you want me to understand that because it's so important for the entire process. And so, like, for me, I'm really grateful for that because I've really learned so much.
And I just love doing it.
Yeah.
I love teaching.
And you're good at it.
Yeah, sort of. I just it's whatever's in here. I actually find it really hard to articulate what I do and how I do it unless there's a scenario in play.
Yes.
Because then I can do it. Because I think, there's two differences between what I do and what the general broking. Like, they can tell you how LVRs, right, a loan, here's a loan.
It's not hard.
It's not. It's not. But you got to start somewhere, right? But I can tell you structure and strategy. That's debt structure and strategy because that's my niche.
Yeah.
And I learn
pretty
it,
important.
learn it, live it, do it,
Yeah.
build it, and constantly evolving because I don't know everything. I'll make mistakes. I've made heaps of mistakes, but
Yeah,
I'm
sure.
okay with making mistakes.
Well, everybody makes them.
Yeah.
Like, it's you know, whether you learn from them and you know, how do you make for me, one of the things that I see as I sort of progress is the mistakes that I make are far less like, oh my, I made this amateur, you know, I didn't realize this property had flooding. It's like, yeah, no, I'm not making that mistake.
Yeah.
That doesn't happen and it won't happen. But it's like, as I progress further, the mistakes that I make are more subtle. And I see it the same with my team. They're more subtle, the mistakes that are made. And it's just like a slight misalignment. And I think for me, it's like, that's how I've been able to tell that I'm like, oh, I'm really, you know, operating at a real level of expertise here.
It's a little thing,
Those
it's
little
not a
ones.
large
And I'm
thing.
learning every time, and I'm still learning from all those micro, subtle mistakes that were so subtle that no one even realized they made it. And it's only from my extremely high expectations and perfectionism that has even caught and realized the fact that there was a mistake made in the at all.
It's like, oh, whoops, I didn't realize that. But you don't know what you don't know.
No.
Yeah, until you make it. And I think the best way to learn is to make mistakes.
Yes.
Because the mistake will either cost you time or cost you money.
Yeah.
Or reputation, one of the three.
Yeah.
Right? But you know, the other thing that we talk about how we collaborate.
Yes.
The reason why we collaborate so well is we're both willing to say no to clients.
Oh yeah. Yeah.
And I don't think there's a lot of yes people.
Yeah.
Yes, I'll buy you that house. Yes, I'll fund you that trust loan that you probably don't need, but because I need it to put on my book, and I'll get you that house because I need to cash flow my business for a month. We're okay saying no.
Oh, yeah. I say no to clients all the time. I tell them, okay, this is what the offer needs to be for this property. And, you know, we have thought about this. We have really considered what this right. It's not just some number I come up with. And then clients will think that it's some sort of a negotiation between me. And I had one the other day, 825. And we said, yep, put the offer in at 825. That's what we're going to do. The client comes back, says, oh, I'm willing to put an offer in at 815. And I got back on the phone and I was just like, no, this isn't really how we do things here. It's not that, you know, what you think it's worth. I'm just telling you, like, this is the property we're going for. This is why we've had the discussions with the agent. This is where and you know, that I didn't do it in any sort of a nefarious way. There was nothing untowards about it at all. They just sort of thought that's what you do. And I explained the whole thing and the whole piece. Yeah, I explained the whole piece. And I did very, very, you know, very calmly, respectfully, and was like, just like, oh, hey, we've really thought about this, and 825 is the right price to be putting in for because of this, this, and this. If we put it at 815, then that's going to trigger with the agent a thing of, we're a bit far off with these guys. And the risk is, do they go to somebody else? Do they look at us and think, I don't know if they're that serious. I don't know if they're there. And when I explain it to the client, they're like, oh, geez, you've really thought about, I'm sorry. Oh, I'm sorry. I'm like, no need to be sorry. But like, really thought about this, and they're like, yeah, let's do it 825. And we actually bought it for 825.
Yeah, and it's all about giving context and purpose.
Yes.
And it's a strategy. They don't understand what the strategy is. They don't know what they don't know.
No.
And I think, you know, we're both very good at educating people.
Yeah, sure.
To a way we're not making the decision for them, but it's like, well, here's the reasons why we're actually doing it our way. You can go do it that way. We just will miss out.
You know, it's a really interesting thing when you said you're not making a decision for them, because it's a kind of fine line. And as I get more confident in the business and the outcomes that we've produced and the methods that we're taking, I have to say that I am more working towards making the decisions for the clients, not doing it without involving them and getting their okay, but like being much stronger on like, this is what we're doing, this is how we're doing it. You're paying me for an outcome. You know, what we're doing here is very specific and specialized. This is how we need to do it. Are you okay with that? You know, rather than what do you think? What should we put an offer in of like, hey, we're putting it at 825, just letting you know. Yeah. Is more the thing. And it's funny as well, because clients, I've noticed, they really respect that, because they're like, there's this feeling of, oh, okay, I wasn't necessarily expecting it to come out like that, but he's got it. Yeah. He's really got this, and I trust him and I back him because he's so sure and confident about it.
Yeah, exactly. It's about the delivery
of
what you're trying to do. But mate, like, I guess, you know, we can talk about the right team and stuff like that, but what advice do you have for potential investors, right, about surrounding yourself with the right team? How do they how do they pick these people? Right? Like, because that's important, because we're talking about the right property, the right finance strategy. How do they pick the people?
I think that just because something is flashy and it has a good headline and stuff like that doesn't make it the right move. Look into it, get good advice. I would also cross-check the advice. So if you're putting together an accountant, a financial planner, a broker, and a buyer's agent, you know, ask them all about this. You know, speak to your broker of like, oh, so the buyer's agent said that, you know, we should do this type of thing. What do you think? And then it's no guarantee to catch it or catch a poor strategy, but you've got more likelihood of somebody if you're getting sort of hoodwinked, if you're getting sold into some big dream, like, you know, an off the plan house or something
I had
like
that with a client.
Yeah, of course, bet you have. You probably had to tell heaps of people, be like, no, don't go and do that house and land package in Ripley Valley. I don't know if that's a great idea. Did you know that the people doing that are making a $40,000 clip from the builder on the construction
And
of
the
that
val will
house
be
that you're doing?
40,000 short.
And they go, oh, what? Oh, I didn't know that. And it's like, that's why I think that, you know, it's not a foolproof solution. There's no perfect way to do it, but I think the best way is find really good trusted advisors and then cross-check the advice from those trusted advisors with each trusted advisor. And then that'll pretty quickly weed out the real bullshitters.
And I think the way you select it, like, free is not always best either.
No, definitely not.
Free, but
You
like,
and I both charge
Yeah.
money up front to people to get them in the door because we can.
Well, it's so specialized.
Yeah.
It's like, well, what's this compared to the hundreds of millions of thousands of dollars that you're going to potentially get? Or it's the certainty of what you can do, what you can't do, when you should do it, what you should do.
Yeah.
Like, it's strategic.
Yeah, and I think as well, it's just reminding me of I heard a buyer's agent, I don't actually know him, but he told this story on LinkedIn, and it's about, like, don't choose your consultants necessarily based on their price alone. He said he was going head-to-head against another buyer's agent, then versus this other. The client said, yes, we'll use you. You know, congratulations. You know, I'm really looking forward to working with you. Then went back to the other buyer's agent. They slashed their fee by 50% to get the deal. So they were doing it for less than $10,000. And it's like, ooh,
That's
I
a
don't
red
know
flag.
if I want to use a buyer's agent that's charging me $8,000 for a purchase. Like, I think about how much time and resources and effort it takes in my office to find a property. It's like, I would, and I'm not even joking, I would be broke, flat broke, and in bankruptcy if I was charging $8,000 for a purchase. It's not that, you know, I'm driving a Ferrari from charging more. It's like, well, no, it costs more to deliver good outcomes for people.
Yep, exactly. I mean, mate, we could crap on about this
Yeah.
because it's so important. I don't understand why. I just want to get that education out there. People need to understand what the hell they're doing, because you can't build portfolio. But and then one other tip that I'll give other investors is shit takes time.
Oh man, doesn't it?
Like, you know, don't expect shit to happen. Once you get a property, 6 months, it's miraculously grown 50% in 6 months. It takes time. You need to let time and the property market do its thing.
Yeah.
You still need to earn money. You still need to grow the capital, and you still need to have good credit.
And, you know, the other thing about time is it might take a little bit longer to get their finance through you because they're doing it in a far more detailed way where you're considering so many more things. Take that time. It's worth that time. It's like some clients come on board with me and they say, oh, so do you have like properties ready to go for this? And I laugh and I'm like, properties ready to go? I was like, do you know how hard these are to find? I'm like, no, we have like 10, 15 clients at once and we need to because I can't afford to have a property slip through the cracks. No. We never miss a property because they're so hard. And so time again, just like with yours, it takes time to do the right things.
Go slow to go fast.
Yeah.
That's the motto in the team. And you will get there. And also when you get the property, man, you got to take another bit of time before we go again.
Yeah.
Got to let, because unless you got cash, it doesn't work.
Slow is smooth, smooth is fast.
Correct. Mate, great bunch of knowledge bombs. Really appreciate it. You coming on again. got to maybe do more. I know this has screwed up our little timeline of podcasts again because
Yes.
you've gone back to back and you're pretty close. But man, how do we get a hold of you? Tell us quickly.
Yeah, so website is lucidpi.com, LUCIDPI for property investment.com. And then you can find me on LinkedIn, linkedin.com/Chris-McNulty, McNulty.
Pretty easy to find.
Yeah.
There's not a lot of McNultys out there.
There's not.
And as always, the information on this podcast is very general in nature, doesn't take into consideration your personal circumstances. You want property strategy advice, go to Chris. But if you haven't got your finances sorted or you haven't got a finance strategy, he's probably going to send you to me or to your broker. And if your broker can't do it, come to me. And if you need the finance advice, obviously come to me, and then I can obviously refer you to Chris if it's the right thing to do. Again, thanks for listening, and we'll see you on the next episode.